Hello everyone, thank you for joining us today. My name is Chloe and I'm a research analyst from IFA Singapore. For today, I will be sharing about how rising inflation as well as the Russia-Ukraine crisis have brought about a commodity supercycle. So here's the content outline for the presentation today. First and foremost, we'll be touching on the impact of the Russian-Ukraine war on the commodities sector. Next, I'll be explaining why we think that the commodity prices will continue to remain elevated going forward, especially given this demand-supply imbalance within the whole commodity space. Moreover, in a high inflationary environment that we are currently in, commodities, they serve as a useful inflation hedge. And last but not least, I'll be providing some recommendations on how exactly we can go about to invest in the commodities sector. So the war in Ukraine has wreaked havoc on the global economy, and this economy is already suffering from soaring inflations as well as many supply chain disruptions. So Russia's invasion has severe implications because of the fact that Russia is so resource rich. So Russia is the world's second largest crude oil exporter, and they supply about 40% of Europe's natural gas. So beyond oil and gas, Russia is also amongst the leading producer of metals such as aluminium, nickel, copper, and iron. And if we look further down, the country is also largely involved in the agriculture commodity space, and they are responsible for about 20% of the world's fertilizers, as well as a major player within the wheat export industry. So given Russia's role as a commodity superstore, it's no surprise that a wide range of commodities out there have been impacted. And this ranges from that of the energy sector, such as the oil and gas, to that of the metals, and all the way down to that of the agriculture commodities. So on the next slide, it was no surprise that because of whatever is happening within this space, that the US as well as the global benchmark of oil prices, they've touched their highest levels. And this is pretty significant because the Brent crude oil price, they actually surpassed $100 a barrel in the first time since 2014. And when we look at what is happening within this space, we think that it appears that the current path towards a de-escalation of conflict, it becomes increasingly challenging. So over time, sanctions against Russia have been piling up. So let's take, for instance, the US as well as its allies. They've initially stopped short of imposing sanctions on Russian energy exports. But this has since changed as the US actually barred Russian energy imports as well as barred the Americans from financing the companies that invest in this Russian energy sector. And with regards to some of the latest news, the EU is actually now proposing a plan to ban Russian oil imports. And this is likely to be one of the toughest sanctions against Russia in response to their invasion of Ukraine. Moreover, we see this same scenario playing out within this whole agriculture commodity space. And this food price index, as seen in the chart here, is actually compiled by the UN Food and Agriculture Organization. So what it means is that it actually tracks a basket of food commodities. And as you can see here, these prices have been on an uptrend ever since last year, and they continue to reach an all-time high. So this is not surprising given that Russia is the world's largest exporter of wheat, while Ukraine is also another major exporter. So if we take Russia and Ukraine together, they combine, make up about 29% of the global wheat trade, and a prolonged military conflict would disrupt this trade and could make much of this wheat available to the export market, and you could see that the food prices would rise much further. So furthermore, this crisis is also being compounded by the fact that fertilizer prices have been rising as the war pushes up the price of natural gas. And this natural gas is a main input for things such as your nitrogen fertilizers, for instance. But despite all these recent volatility, we think that the rationale for investing in the commodities sector, they continue to remain intact, especially when you consider this demand-supply imbalance within this whole space. So this imbalance can be observed across the energy, metals, as well as the agriculture market. So looking into the markets, so let's take, for example, this energy market. And I would like to highlight the oil and gas specifically. So we see the case where the supply has been unable to keep up with this resurgent demand following a COVID-19 recovery. And one of the main reasons of this is due to the fact that this fossil fuel industry, they've fallen out of favor with the investing universe over the past decade due to many ESG considerations as well as mandates. And this is a sector that actually badly needed new investments in order to keep up with the growing demand. So in fact, we find the case where the annual investment in upstream oil and gas actually peaked in 2014. And as you can see here, since then, they've been on a decline, and this is despite the fact that the world is still consuming near record amounts of fossil fuels. So today, nearly all the energy that is needed to meet our needs, 80% of the global energy demand actually comes from burning fossil fuels. So it appears that for now, at least, renewable energy, they are actually unable to replace fossil fuels to meet our energy needs. And to make matters worse, the vast oil surplus that has been accumulated during the first few months of the pandemic have actually declined, and thus they've been wiped out with the many inventories of these OECD countries falling. So going forward, we think that this weak supply coming from the OPEC Plus will further worsen this demand-supply balance observed within this whole energy sector. So OPEC Plus, they are reluctant to actually pump more oil in order to cool oil prices and are instead sticking to a modest output increase of 432,000 barrels per day. But this is an amount that actually has done little to kind of alleviate people's supply fears. And this is not surprising when you consider the fact that within OPEC, several producers, namely the West African countries, they are struggling with years of underinvestment as well as the large maintenance work which has been delayed due to disruptions arising from this whole COVID-19 pandemic. And as seen in this recent news article, you can see that OPEC Plus, they've even fell massively short of their targets as all these capacity constraints, they continue to persist. So in view of all these issues, the oil prices, we think, will likely remain elevated unless further supply becomes available or the world experiences some form of demand destruction. And that this could come when consumers reduce consumption in view of the high oil prices. So next, when we look within the metal space, I think a similar story can be illustrated here, where the demand for metals, in particular green metals, and these are the metals that are needed for this whole clean energy transition, in order to move away from that of fossil fuels to clean energy sources. So over time, this ongoing clean energy transition needed to combat these ill effects of climate change. They've unleashed a huge demand for metals within this coming decade. So let's take, for example, an electric car. So an electric car, for instance, requires about 4 times more copper than that of a normal conventional car. And besides copper, there are other metals out there such as lithium, cobalt, and nickel, and they are all tightly linked to this electric vehicle and energy storage sectors. So these demand for the metals are rising exponentially in view of all this. Not to mention, all of this are occurring as the largest economies of the world, such as your China as well as your US, they are actually pushing stimulus plans that are targeted towards this whole renewable energy infrastructure. So where it stands, this lack of supply has already sent these metal prices surging. So So within the next slide, last but not least, the world is also experiencing a deepening food crisis. So even before this whole Russia-Ukraine war, there was a shortage of fertilizers in the market out there. So in 2021, for instance, there were sanctions imposed by the US on Belarus. And Belarus is the third largest potash producer, and this was following the Belarus president's brutal crackdown on widespread protests following his contested elections in 2020. And potash is one of the main input of fertilizers. And not to mention, as of last year, China is also tightening their export of fertilizers. So what this means is that they have actually shut off the supply of their fertilizers to that of the global market in order to try to limit their own domestic food prices. So last but not least, I think we all know that these fertilizer prices, they continue to spike as Russia's invasion of Ukraine puts a massive portion of the world's fertilizer supply at risk, given that Russia is one of the largest global exporters of fertilizers and accounts for 20% of the global output. So Russia is now urging its producers to actually reduce export of fertilizers, and all of this increases fears of such shortages. In view of all these, you can see that this fertilizer price index has shot up to a record high, and fertilizers, because of the fact that they are key to keeping things such as corn, soy, wheat, as well as rice yields high, this fertilizer crisis is in some respects very worrying because it could inhibit global food production. And what this means is that it will lead to higher food price inflation. And at the backdrop of whatever is happening within the whole commodity sector is none other than that of this rising inflation. So within these next few slides, I can see that inflation has risen to one of the highest levels in a generation. So just recently, it was announced that the US consumer prices have actually risen by about 8.3% in April compared to just a year earlier. So combined together, we think that this rising inflation as well as these geopolitical tensions, they have no doubt created a commodity supercycle. And in a high inflationary environment, we find the case that commodities, they typically will outperform other asset classes. So there's a strong 10-year correlation of 0.73 between the year-over-year growth of the Bloomberg Commodities Index as well as the US CPI year-over-year growth. So this highlights the effectiveness of commodities as an inflation hedge. So given that Russia's role as a commodity superstore, this economic impact of the crisis would mean that global commodity prices will continue to rise. So they're likely to remain elevated also, and this serves to mean that our commodities-related equities could actually serve as a rather decent hedge for one's portfolio. So with all that's being said, I think the next question to ask oneself is, how should I go about investing in commodities? So in the interest of time, I'll be sharing about how one can benefit from rising agriculture commodity prices by investing in the agribusiness sector. And my colleague Cyrus, who also happens to be the next presenter after me, will be coming in with a presentation on metals later, coupled with some ideas on how to play on this metals boom. So please check out his presentation if you are interested to find out more about this metal space. So in essence, investors can actually gain exposure to this whole agribusiness sector via the use of this VanEck Agribusiness ETF. So this ETF is known as Moonshot. In essence, it's one of the largest as well as the most liquid pure equity underlying ETF that provides one with exposure to the global agriculture space in a diversified manner. So it does so, in essence, by investing in companies that are involved in the farm equipment, seed and fertilizer and animal health industries. And the ETF comes at an expense ratio of 0.52%. So this ETF, MOVE for instance, has actually benefited from this fertilizer boom, which I was just sharing about earlier. So the ETF as a whole has exposure to fertilizer companies such as Nutren, as well as the Mosaic Company and CF Industries. And these three companies are also the largest sellers of potash, phosphate, as well as nitrogen fertilizers respectively. And together, they make up about 14% of MOVE's overall holdings. So this high demand for crop nutrients and this limited supply have boosted the profit margins for these fertilizer companies. And we think that this agribusiness industry presents an area of opportunity. So you can see that these agriculture prices, they're likely to extend their climb, especially in 2022, given what we're seeing within the current demand-supply dynamics. And with the food prices rising higher, the companies that support the food production, they would naturally benefit as rising prices lead to increased production. So this higher production will then translate into increased spending on seed, fertilizers, as well as farm machinery. And they'll benefit companies higher up this agribusiness supply chain. So in the next slide, as the war disrupts this whole global food supply, we think that it brings to the forefront the issue of food security. And again, it exposes this critical nature of the agribusiness sector. And beyond this, we do also want to note that there are secular trends that make this agribusiness industry one that has incredibly promising long-term prospects. And one of the most compelling trends that are driving these growth is no doubt an increasing global population. With a global population expected to reach about 9.8 billion by 2050, there's actually a pressing need to figure out how to increase our food supply. Another secular trend that is driving the growth of this whole agribusiness sector is that of income growth. So as one enters the middle class, it typically correlates with higher consumption of animal-based foods, and these are more resource-intensive to produce. So in order to feed this larger, richer, as well as more urban population, food production actually has to increase by 70% by 2035. And so we think that these agriculture companies, as well as the commodities, they present an exciting opportunity for investors out there. And with this, I actually come to the end of my presentation. So I hope you have enjoyed the presentation, and I hope to see you again.